Hi, thank you very much, Peter, for that very kind introduction, and a warm welcome to everyone in the audience. I'm very happy to be part of this. It's a pity that I'm not attending in person this time, but I'm sending you greetings from Cape Town. So my talk is about South Africa's energy landscape, and it maybe leads in very nicely from the previous presentation in some of the issues that were highlighted. Issues, challenges, we see those as opportunities, and hopefully I can demonstrate that there are some solutions to going forward in South Africa. Next slide, please. So just the usual disclaimers before we start. Next slide, please. So my presentation is divided into two parts. I'll, in the first part, just touch on the South African upstream sector. I'll also mention some of the midstream infrastructure that is available, talk a little bit about electricity generation and South Africa's ambition and roadmap going forward, and of course some of the challenges that presents and possible solutions. In the second part of my presentation, I'll be talking a little bit more about our company, Africa E&P Corp, our activities in South Africa at the moment, and how these hopefully fit in with some of the challenges. So we can start off with this slide to show South Africa's petroleum basins and some of the main upstream players that we have in the country. I'll be speaking exclusively about the offshore areas, which host conventional oil and gas resources. South Africa is surrounded on three sides by coastline, and the offshore area contains more than 10 sedimentary basins. Now, 4 of those basins have proven oil and gas resources, and for the rest, there's obviously a huge room for growth, both within the discovered basins, but also with new basins to open, and we heard a little bit about that earlier today already. I think the most significant event in the upstream in recent times was, of course, the discovery of gas condensate in the Outeniqua Basin, and we'll be speaking about that today. I can also remind you that we heard from Shell this morning that they are very excited about South Africa, so those are good signs that there's a rejuvenation of the South African upstream. Next slide, please. This might not be well known in the international upstream industry, but South Africa actually has quite an extensive midstream infrastructure network. And as we heard in the previous talk, that is usually the key to trying to monetize some of these resources that are discovered. We have more than 3,500 kilometers of pipeline. Those are mainly transporting liquid fuels and gas. We have more than 700,000 barrels per day refining capacity in South Africa, and that also includes some very specialized technologies such as coal to liquid. Those are located inland close to the coal reserves, and then we also have the gas to liquids plant in Mossel Bay, which is located close to the offshore gas fields. Despite these innovative technologies, though, the bulk of our liquid fuel is still imported, mainly as crude, but also as refined product. And that, of course, means that South Africa is still heavily reliant on international imports at this stage. To date, we've produced more than 360 million barrels of oil equivalent, and that was mainly from the Bredasdorp Basin. But as you can see on the production graph there, supplied by Woodmac, that the offshore fields are now largely depleted. So the discovery of major gas condensate reserves in the Outeniqua Basin, they come at a really good time. However, as you can see from the resource estimate, and what was mentioned already, is that the resources are bigger than the existing industry in that area. And to us, that just means that the gas condensate can have a growing role in South Africa's energy transition, and this is something that we'll discuss a bit more. Next slide, please. So having a look at the GTL plant in Mossel Bay that is operated by our national oil company, Petra SA. It's one of very few synfuel plants worldwide. it produces clean, low-sulfur synthetic fuel from gas using the Fischer-Tropsch technology. The capacity of the plant is 45,000 barrels per oil equivalent feedstock that it can process. But maybe more importantly, it employs more than 1,000 direct jobs. And besides that, it's estimated that it supports about 26% of the local economy in that part of South Africa. So the dwindling gas supplies would threaten the continued operation of such a high-tech plant. And in addition to that, at this stage, there are 2 crude refineries in South Africa where we are experiencing some operational issues. So that creates some big challenges to South Africa. First of all, we already have a big unemployment problem in South Africa, so we cannot afford to lose any existing industries at this stage. And then our refining is operating at 50% capacity. That obviously means that we have to import refined products, which are typically more expensive and do not bring the same local employment benefits as in indigenous industries. So part of the solution is obviously to restore the gas feedstock to the GTL plant to full operation. Next slide, please. Now we can speak a little bit about electricity. So the electricity ambitions and future roadmaps are captured in a document called the Integrated Resources Plan, and it's a bit of a living document, but here's one from 2019, so maybe not quite up to date with the resources that have been discovered in the meantime. However, you can already see that gas and renewables feature very prominently in the proposed updated 2030 plan. For the current base load, almost exclusively being generated from coal. So looking at an ambition like this obviously presents some big challenges, but comes with big opportunities. And the biggest opportunity for the upstream industry is obviously to supply that gas and to promote the growth of that industry. Next slide, please. The South African government is well aware of the role that gas can play in the energy transition. The biggest short-term challenge to delivering reliable and affordable electricity is the aging coal plants, which also have been mentioned today. Many of these plants are reaching the end of their design life, and not all of them are compliant with the local and international standards of the environmental ambitions and also the commitments made internationally. However, they employ a lot of people in South Africa. So the big question then comes, do you extend their life? Do you close them down, or do you maybe convert them to other feedstock? At this stage, our national utility, Eskom, is already unable to always meet peak electricity demand. So frequently they have to resort to expensive diesel-fired peaking plants, and in worst cases to some blackouts. These started in 2007, and as you can imagine, they have a negative effect on society and the industry, and they are very high on the government's agenda at this stage. So again, gas has been highlighted as overcoming some of these challenges. So in the short term, 2,300 megawatt of diesel-fired peaking stations could be converted to gas. We've been told that this would reduce their carbon emissions by up to 50%. So I feel that's a significant number. In the longer term, as we can see here, the ambition is to grow a local gas, solar, and wind industry. These, as you know, are very complementary sources, and they are available in South Africa, which is very, very important for both the carbon reduction ambitions and also at the same time to develop the local industry and have an equitable transition. Next slide, please. That brings me to the second part of my presentation, which is about Africa Energy and our activities in South Africa. Hopefully I can show how they fit in with some of the challenges that we experience in South Africa. This is a summary slide of our company. We focused on Southern Africa at this stage, but always looking to grow north. Our main technical office is located here in Cape Town, and all the staff in this office are South African. Today I'll talk a little bit about Block 11B, 12B in the Outeniqua Basin and Block 2B on the west coast. Next slide, please. So in Block 11B, 12B, we are partners with Total, the operator, QP and CNR. It's a big block. It's more than 18,000 square kilometers, but maybe more important than just the size is that it covers almost the entire Outeniqua Basin, where the biggest discoveries of gas condensate in South Africa were recently made. The southwestern part of the block contains a large reservoir fairway, which is called Padavasi. That means tadpole in Afrikaans, and the name is owing to the shape of this feature, which was identified on 2D seismic data almost 20 years ago now. The map also shows the fields and the pipelines that were feeding the gas to the GTL plant, and also the Geophysicist peaking plant is shown there. And as you can see, we are in close proximity to this infrastructure. So at this stage, the joint venture is investigating the feasibility of an early production system. Next slide, please. We briefly saw these in the previous presentation already, but I'll just give a little bit more detail. This is a schematic cross-section through the Lipid discovery. It was drilled last year in 1,700 meters of water, and it encountered 73 meters of net gas condensate with the gas down to. There was a DST that flowed 33 million cubic feet per day and more than 4,000 barrels of condensate. And this test was surface constrained, and the calculated open hole flow rate is significantly higher. It also proved the seismic direct hydrocarbon indicator, which was calibrated at the Brawl well. And this, of course, de-risks the remaining prospects to a very large degree. Next slide, please. Just a quick reminder, this is Brawl. That was the first well that was successfully drilled in the Outeniqua Basin. It was drilled with the deep sea Stavanger rig without any issues. And it was a major success both at the primary and the secondary level. And I feel that that's not bad for a play opening wildcat well. It importantly proved the drilling technology for drilling in the Agulhas Current and also opened up the Outeniqua Basin. In my opinion, this is one of the most significant exploration wells in South Africa. Next slide, please. This is a public domain seismic line through the southern part of the Outeniqua Basin. It's more than 100 kilometers long, just to show you the large scale of the Padavasi fairway and also of this basin. And as you can see, there are many interesting levels, both above and below the Padavasi level. And with only 2 wells drilled to date in this basin, we are really at the very early stages of exploration here. Next slide, please. So to summarize, Block 11B, 12B, it's a huge block, and it covers most of the Outeniqua Basin. The first 2 exploration wells ever drilled were both major successes. At the moment, we are investigating the feasibility of an early production system, and that would, of course, be followed by larger development owing to the large resource estimates. South Africa definitely has the economy and the market scale to use some of this gas. There's plenty of running room and huge scope for more discoveries, both within the 3D area and the Padavasi area, but also towards the east on the new 2D seismic that was recently acquired. Next slide, please. So we now move across to the west coast of South Africa. Block 2B is smaller. It's just over 3,000 square kilometers. But importantly, it contains 2 highly prospective rift graben in shallow water with calm mid-ocean conditions. AEC recently farmed out equity to Panoro and Azinem, and Azinem took over as operator. The highlight of this block is a 1988 oil discovery called AJ1, which flowed 36-degree API oil to surface. The operator Azinem is planning to drill a well Gazania 1 up dip from the AJ discovery later this year. We've estimated the minimum commercial field size at around 50 million barrels, and the Gazania prospect area, the area up dip of the oil at AJ1, it's about 40 square kilometers, and we've estimated it to contain about 300 million barrels, or the potential for. So this makes it commercially attractive given the risks. And so just to recap, to date, 70 million barrels of oil have been produced from the Bredasdorp Basin. So if Gazania comes in on prognosis, it would be a big event for South Africa. It would reduce our dependence on imported fuels and, of course, create much needed job opportunities locally. Next slide, please. This is a cross-section through the AJ Graben. You can see the AJ1 oil discovery drilled on the left-hand side. It discovered oil in deeply buried and distal reservoirs. We believe that was the reason for the low flow rates at that well. Up dip at Gazania 1, the reservoirs are shallower and more proximal, and that has the potential for commercial oil flow rates at that location. Next slide, please. The block also contains the northern Graben, and this is a composite seismic line through both of those. The northern Graben is a lookalike to the AJ Graben, and very importantly, it also lies within the oil window. So in the case of success at Gazania 1, there's significant additional running room in this block as well. Next slide, please. So this brings me to the end of the presentation. In summary, I would say that a success at Gazania 1 could be a game changer for South Africa's upstream industry. It would certainly help with security of supply, and it would create a local industry with jobs. The major gas condensate discoveries in the Outeniqua Basin are significant for South Africa's energy future. Gas can help alleviate some serious short-term challenges for refining and electricity generation. And in the long term, you saw that local gas was earmarked as a key growth industry in South Africa. It enables an equitable energy transition and a more sustainable energy mix. And lastly, we're proud to be involved in tangible, high-impact E&P activities for the mutual benefit of our shareholders and all South Africans. And with that, I thank you for your attention, and I'm hoping to meet up with you again next year in person.